Okay, so my dear friends, this video is for educational and informational purposes only. Please do your own research or consult a professional financial advisor before investing your money. Thank you. The focus on artificial intelligence is shifting from graphic chips to central processors. Newer frameworks like agentic AI need CPUs to coordinate complex tasks like multi-step reasoning and database checks. Because of this, up to 90% of their runtime goes through standard processors, driving the server processor market toward a projected $220 billion by 2030. Investing in the AI trend is risky because high stock prices might already include maximum growth expectations. Top semiconductor companies face heavy operational challenges and a dangerous reliance on a single factory in Taiwan. Because of this, even a company with over 50% revenue growth can see its stock price drop sharply if it misses Wall Street aggressive targets, proving that backing a tech revolution fails if you buy at an overinflated price. AI stock hype crashes with reality because market leaders command extreme valuation at 94 times free cash flow. This means today's trading prices are so high that even if corporate profits triple over the next 4 years, the actual value will barely break even. Furthermore, the primary global chip factory has low free cash flow because it must constantly spend massive amount of cash to build and maintain expensive manufacturing facilities. Ultimately, ignoring these numbers turns a great tech story into a poor investment.